The Federal Reserve's Daniel Tarullo is stepping down. He was, or still is for now, the top regulator of Wall Street banks. He leaves in April, leaves the Federal Reserve in April. Our next guest is very happy about this. He says Tarullo may have done more to harm the American economy than any single person in the history of the nation. A little bit strong, maybe. Come on in, Dick Bove, banking analyst, who joins us now. Okay, we got it that you don't really care much for Daniel Tarullo. He's a socialist and he's ruined the country. I got that. But now that he's going in April, which bank stocks should I buy which are going to go up some more in the future? Tell us.
Oh, I think very definitely, if you take a look at the largest banks in the United States, they're going to benefit very meaningfully from his stepping away. Basically, I would buy, Bank of America, Citigroup. I would buy J.P. Morgan. I would even buy Wells Fargo. I would buy Goldman Sachs. I would buy Morgan Stanley, because essentially you've got, this foot that was on the throat of the banking industry that's been removed. And by that I mean, you probably don't realize, but there are over 20,000 people working at Citigroup, over 20,000 people working at Bank of America, working at each one of these big banks, who are there because of regulations that Mr. Tarullo has created, and they're imposing those regulations on the banking system.
20,000 at just one bank geared towards regulation and regulatory oversight? 20,000?
Yeah, get someone in from J.P. Morgan and ask him. Get someone in from Citigroup. Michael Corbett, who is the CEO of Citigroup, has said 25,000. I'm saying 20. My guess is that there's over 200,000 people in the United States working in the banking industry, working solely on regulating, risk control, things of that nature, because of rules that Daniel Tarullo put in place. The reason why GE doesn't have a financial, if you will, subsector anymore is because of Daniel Tarullo. The reason why MetLife went to the Supreme Court is because of Daniel Tarullo. If you take a look at the money supply of the United States, you see that 5 of every $6 in the money supply of the United States are bank deposits. And if you keep doing what Daniel Tarullo is doing, which is continually increasing the capital requirements on the banks, continually increasing their liquidity, you're pushing down the growth in the money supply. Well, the velocity of money in the United States is plunging, and it's plunging because we have all of these regulations put through by the Fed, which is controlling the growth of money supply, which is weakening the ability of money to stimulate economic growth. His passage is great.
Now, if he leaves in April, that means that President Trump will be able to fill, I think, 3 of the 7 seats on the Federal Reserve's governing board, and Janet Yellen, her term is up next year. So within a reasonable period of time, President Trump will be able to control the Federal Reserve, change the rules at the Federal Reserve without going through Congress. Is that accurate?
Yeah, that's the beauty of what's happening here. In other words, basically, what you're going to see is, as you very correctly mentioned, Stuart, that 3 openings can be filled immediately. Ms. Yellen is probably going to leave in February of next year. Mr. Fisher could probably leave in June of next year, so that the president would have 5 of his people on the Fed, and he could change, if you will, this regulation of the industry without going to Congress. But it goes well beyond that. If Mr. Mnuchin is approved as Treasury Secretary tonight, he will become the head of the Financial Stability Oversight Council, and that regulates all banking in the United States. Mr. Trump is going to be able to change the FDIC, the FHA, the SEC, the OCC, all of these gobbledygook agencies, and he's going to be able to boot the Consumer Financial Protection Agency out of the Federal Reserve. All of these things will ease regulation meaningfully. None of them need anything to do with Congress. Congress is not doing anything to help deregulation, in my view, except flapping their lips. The fact of the matter is, this is real change. It will be very positive, and buy some bank stocks.
And I take it you've not heard recently from Senator Elizabeth Warren, but that's an entirely separate story, Dick Bove. But thanks very much for being with us, tongue in cheek. Thank you, sir.
Thank you.